Yeah, so welcome everybody. Thanks very much for joining us today. My name's Rich Weber, and I'm a principal with Baker Tilly. And today's webcast is Epicor ERP for GovCon, uh, compliance roadmap, gap analysis, controls, and next steps for 2026. If you joined us for a prior session, are your manufacturing systems ready for compliance? Welcome back. And if you're new, you're in exactly the right place. I'll briefly level set on a few key concepts so everyone is starting from the same foundation. And I will just start the sharing here. My apologies. And while that gets going, I just wanted to note that the focus today is really very practical. We're going to move kind of beyond high-level concepts and really into how to run a structured gap analysis in and around Epicor, what controls matter most in a GovCon manufacturing environment, and really how to translate those findings into a realistic, prioritized plan for 2026. One quick note before we start. Today's content really is intended to be educational and broadly applicable. Every environment is a little bit different, whether that's your Epicor configuration, internal processes, or contract mix. So you'll want to tailor what we discuss to your specific situation. And with that, I'll turn it over to Creative Technology and Design to introduce themselves.
Okay. So Creative Technology is a company that is focused on manufacturing companies. And we provide a host of technology, including ERP, product lifecycle management, IoT, manufacturing execution and quality. And we do all of that with AI and BI surrounding it. And we do that by bringing best practices and industry compliance to the equation. Our team, we have a very strong team that's centered in the US, and a majority of our company are professional services team members that are in 37 different states in the US. And that team brings best practices and our manufacturing excellence to your requirements and implementations. And many of our team members are also military veterans as well. So many of you know this session will be about compliance and gov accounting, and just so everyone knows, within the Epicor platform, Creative has added a significant amount of capability specifically to address government accounting, DCAA rules, long-term agreements, 605 and 606 accounting, and you're going to hear more about that from Rich. Turn it back over to you, Rich.
Thank you so much. And I will get back to my slides here. And there we go. Apologies for the delay here. I think the next slide here is, as it comes up, is an introduction of myself. Again, Rich Weber. I'm a principal with Baker Tilly. I work in government contracts compliance as well as federal income tax, and I've worked with government contractors in a wide range of industries for just about the last 15 to 16 years. And so seen a lot of different areas of the federal contract landscape, and happy to be here today and to present to everybody. So before we kind of go into the content, I also like to talk about who Baker Tilly is. Just a quick intro. We're now, after the merger with Moss Adams last year, the 6th largest CPA and advisory firm in the United States. We've got over 11,000 professionals supporting clients nationwide, and we've got a large international network as well. One of our kind of large areas of specialization is aerospace and defense and the broader kind of government contracting community. And our teams work with small business subcontractors all the way up to billion-dollar primes. So we don't just help companies meet compliance obligations. We also help them modernize their systems, automate processes, and really use compliance as a competitive advantage. So when we talk today about being ready for compliance, the focus is really on how to build these capabilities in a way that supports the business, really improves visibility, and kind of strengthens operations. So a couple quick housekeeping items, and then I'll set kind of the purpose for today. But first, feel free to use the chat for questions as we go. It doesn't need to just be me up here talking for 45 minutes. I'll try to answer on the fly. If not, I'll defer. I'll try to pause here and there throughout the presentation. Second, if you're taking notes, you could really kind of listen for three things that you can really immediately apply. One is how to assess your current state compliance and readiness in Epicor, really without turning it into a multi-month, years-long process. The second thing would be, which controls and evidence artifacts really matter most in a GovCon manufacturing environment. So you're not really overbuilding controls that don't reduce risk. And then the third is, how do you prioritize and sequence next steps so you can really make progress in 2026 without kind of disrupting your entire operation? So the promise of the day is really straightforward. You should leave with a framework you can use to run a gap analysis, a set of common gaps to look for in Epicor environments, and really a practical way to build a roadmap that, your leadership and management team can really support, because it's all tied to risk reduction, audit readiness, and operational efficiency. So if that's what you're here for, you're in the right place. So here's kind of how we're going to spend the time. We're going to do a quick recap of part one that we did last fall. If you did not sit in part one, that's no problem. It's not, you're not missing, certain pieces. You'll be able to pick up right from where we start today. But we're going to do a quick review of that, and then we're going to walk through kind of the most common gaps we see in Epicor environments supporting GovCon manufacturers. So things like job setup, charge structure, indirect pools and basis, timekeeping controls, inventory traceability, purchasing discipline, and reconciliation. So, then we're going to talk controls, preventative versus detective. What does that mean? What evidence you should have ready so you can kind of prove out that your controls operate. And then we're going to wrap really with a 2026, like I said, roadmap, including kind of quick wins and an operating cadence that really keeps the system compliant after you've improved it. So, and then with any luck, we'll have time for some Q&A. So part one recap. If we just kind of reset the context, really, we emphasize that compliance readiness isn't just a finance issue. It's not just an ERP configuration issue. It's really the combination of system design and really disciplined execution. In a GovCon manufacturing environment, traceability is really the key word. So auditors, contracting officers, and really internal stakeholders all really want the same thing. And that's kind of a clear explanation of how costs flow all the way from the shop floor and procurement process into the job, into overhead, into the general ledger, and then ultimately into billing and reporting. So that's really why we framed readiness as an audit-ready story. And that story really has 4 parts. Policies, what you say you do, right? Processes, what you actually do step by step. System configuration, which is how Epicor enforces and records it. And then evidence, what you can show, reports, approvals, audit trails, reconciliations, and such. So, and then we kind of ended with a simple truth. If your process isn't documented and repeatable, it doesn't scale and it doesn't hold up under audit pressure. And so, in other words, you can sometimes kind of, quote, get by for a while with tribal knowledge and heroic effort, really. But that approach really breaks when you grow, when staff changes or when scrutiny increases. So then part two today is really where we turn to that philosophy into a concrete action plan, or as much as we can in 45 minutes. So, um, so, the first thing we're going to talk about today is really how to identify and quantify gaps, right? Most teams already have a list of, kind of pain points, late time sheets, messy inventory adjustments, inconsistent job structures, manual timesheets for rates. The challenge is really turning that list into a structured, kind of defensible assessment that leadership can really prioritize, right? And then second, we're going to focus on controls. So in my experience, the best controls are really not the most complicated. The best controls are really ones that are aligned to a real risk, consistently executed by the business, supported by the system, and kind of easy to evidence with repeatable reporting. So, third, we're going to build a sequence roadmap for 26, and sequencing does matter. If you try to fix kind of everything at once, you're going to overwhelm the business. And if you focus on the wrong issues, you're going to spend time and money without reducing the audit risk. So we'll walk through a couple of practical phased approaches that kind of work in real organizations. So, this slide is kind of the backbone of the whole session today. And stage one is really assess, right? What are your current, what's the current state and what are the risks? So, this is, what you kind of inventory what you do today, how Epicor is configured, and where the risk points are. Stage two then here is design. So based on the assessment that you do, you define the future state process and decide what controls you really need. What should be blocked, what should be reviewed, and kind of who owns it. Stage three is configure. And this is where Epicor comes in, with roles, approvals, required fields, workflows, and reporting. And configuration is really only valuable if it actually supports the process and controls you designed. Then stage four is really operate, right? And so this is human reality. People need to follow the process, managers need to approve, exceptions need to be handled, and without an operating cadence, controls kind of decay. And then stage five here is evidence. And so evidence is often underestimated. It's not something you scramble around, once a year for. It should be produced and stored as a byproduct of your monthly cadence so that it's repeatable and low stress. It shouldn't be something that's super laborious, and ongoing. So, today we're going to spend kind of most of our time on assess, design, and configure, and then we're going to talk, at the end a little bit about operate and evidence, so you can really sustain readiness, throughout 2026 and really beyond. So gap analysis framework. Here's really the most important thing to understand, in this, and many orgs find that, think the problem is, oh, my ERP isn't working for compliance. And in reality, most compliance issues are kind of a combination of people, process, system, and data, right? And so we kind of use four lenses. And the first is people. Do you have the right, do the right individuals have the right responsibilities? Do approvals happen by the right level of management? Is there segregation of duties? Meaning the person who enters something isn't the same person who approves it, and the person who can change master data isn't the same person who reconciles it, right? And do people actually understand the why behind the process, or really are they guessing? And then second is process. Do you have documented policies? Are workflows clear? What happens when there's an exception, like a late timesheet, a material return, a price variance, or a job that needs to be reopened? And a process that only works when really everything is perfect isn't really a real process. Third is system. Epicor. If Epicor is configured to support your process, you're on the right track. Are required fields actually required? Are approvals routed? Are roles restricted appropriately? Is there an audit trail? Are you using standardized reports or queries to monitor exceptions? And then the fourth is data, right? And this is huge in manufacturing. If your part master is inconsistent, if job structures vary widely, if charge codes are sloppy, or if the cost elements aren't cleanly defined, you're going to struggle no matter how good your policy is. And so, when you assess across these four lenses, your findings kind of become much clearer. You can distinguish configuration issues from training issues, and you can fix root causes, instead of treating so-called symptoms. So. Water break there. And so next we go into kind of, the next part of the process, which is scoring the gaps, right? Once you've identified the gaps, now you just go through and score them. And then that's really what turns opinions into decisions. And so I like a simple kind of 1 to 5 maturity model, right? Not to be confused with CMMC, but if you look at this in a simple, simplistic manner, a 1 is ad hoc, right? That means the process exists in people's heads. It's heavily manual. It varies depending on who's working that day. A 1 is usually where audit pain, kind of comes from, and because it's difficult to prove consistency, right? 3 then is defined, and that really means the process is repeatable and documented. There are some controls, but you may not be monitoring it consistently, or exceptions that may not be handled the same way every time, right? And then a 5 is managed, and what that really means that it's not only documented and repeatable, but your organization really actively monitors it with dashboards, exception reports, sampling, periodic access reviews, and leadership oversight, really. And the evidence is produced naturally as part of the overall process. And so when you score each area, timekeeping, purchasing, inventory, job setup, indirect rates, billing reconciliations, you can kind of create a heat map that leadership kind of immediately understands. And so, the most important output is really a prioritized backlog, not just quote things we could improve, right? But really things that reduce risk and improve audit readiness. And that's really how you get budget and kind of buy-in for your overall compliance project. So now we can kind of ground this in Epicor itself. And when we talk about compliance readiness for a government contractor manufacturer, these are the Epicor touch points that most commonly come up, right? So first, you've got job or project costing, right? So for many organizations, job cost is really the heart of compliance traceability. If costs don't land correctly on the job, everything downstream breaks. Second, you've got WIP and variances. So, manufacturing variances can be legitimate, but they can also mask issues if they aren't controlled and reviewed. Third, labor capture and approvals. So timekeeping is one of the most tested areas in GovCon environments, and you want consistent submission, consistent approval, and really a clear audit trail. And fourth, you get to, indirect rate structure, right? Pools and bases and how costs are allocated, whether you calculate rates in Epicor or outside and load them in. You really need a defensible, kind of consistent method and documentation. Fifth, purchasing and subcontract, right? Controls around PO approvals, receiving, and invoice matching are key evidence points. Sixth here, you've got inventory and material traceability. And this is really where manufacturing companies feel the most friction because the shop floor kind of moves fast and compliance really requires discipline, right? So down here at number 7, GL structure and reporting consistency. Ultimately your compliance story has to reconcile to the general ledger at the end of the day. And then finally, security roles, change controls, audit trails. If too many people can change too many things without review, you've got risk, especially around master data, rates, and job structures. So as you go through the common gaps, you'll see, these touch points come up kind of repeatedly. So this slide is really kind of a simple test you can use internally. You ask yourself, can we explain and evidence the cost flow end to end without heroic effort, right? And so we start with labor. Can you show the employee charge time to a job, that the time was approved, that the labor was costed properly, that burden or overhead was applied consistently, and that the result ties into the general ledger? Then you go into material. Can you show the material was purchased, received, entered into inventory? Was it issued to a job, right? Were returns handled correctly, and how were variances reviewed and approved? Subcontract. Can you show the subcontract was authorized with a PO? Receipts were documented, invoices matched, right? And costs tied to the job or contract appropriately. Then finally billing. Even if billing is partially handled outside Epicor, can you produce a billing package that traces billed costs to job costs and reconciles to the GL? And if you can confidently answer yes and produce evidence quickly, you're close to audit ready, right? And if you can't, the gap analysis helps you identify why and whether the root cause is people, process, system, configuration, or data, right? So now we can kind of dig a little bit deeper into the first, common gap here, and really it's job setup and charge structure. In a manufacturing environment for government contractors, job setup isn't just kind of an operational decision. It's really a compliance decision, right? When job structures are inconsistent, you create downstream, confusion and labor charging, material issues, overhead application, reporting, billing support, everything. And that applies, to every inventory heavy environment, but especially in government contracting. And so, we're going to kind of go through this starting with the symptoms. So, first you've got the first symptom is kind of like the catch-all job. That's where people dump time or material because they're not sure where it belongs or because creating the right structure is too slow, right? And second is inconsistent WBS levels. For example, some projects have detailed structure, others don't. So reporting and traceability can really vary. Third, job to GL mapping. That can become hard to reconcile because the cost elements or posting logic aren't standardized, and just because job structures don't align with how you really need to report. And the fixes here are usually straightforward, but they kind of require a certain set of discipline. One, implement a standard job template, right? And make certain fields required. Required fields might include contract identifiers, cost types, customer program, WBS elements, or really anything you need for reporting and billing support. And really depending on your Epicor configuration and version, that can be done through business process management, forms personalization, or really workflow rules. And so the exact method kind of varies, but the concept is don't allow incomplete jobs, right? So, two, if you establish governance for job creation and closeout, that's a win. So that really means someone owns a job setup standards, approves exceptions, and really ensures that jobs are closed timely with appropriate review of WIP and variances. Three, define reconciliation rules, right? So on a monthly basis, you should really be able to reconcile job cost summaries to the GL for key cost elements. And if you can't, you want to find, that you want to find that out really monthly, not, waiting for an audit or a year-end close. So, if you take nothing else from this slide, really job structure is kind of the root cause of compliance pain, right? So fixing it early just kind of makes everything else easier. And I'll take a quick pause there. I was just looking to see if we had any questions so far. I don't see any.
So if I got a few in the Q&A here, Rich.
Oh yeah, I see here.
Yeah, so not chat, but Q&A, you see those?
Oh yeah, okay. What controls tend to make the largest impact quickly in a GovCon manufacturing environment? I'm going to save that one till the end because I think we go pretty deep into these controls here, and maybe we can come back to it. How much compliance readiness is an Epicor configuration issue versus a process or training issue? I would say it's really, it's all layered on each other, right? And so it's hard to say kind of like a blanket percentage in this response. It's almost of equal importance, right? The system configuration with your business process layered one on top of the other. And so I think as we get through this, you'll see the common theme that it's so tightly kind of intertwined that they're both equally important. So. All right. Thank you for those. And so, if we get into gap number 2, right? Indirect rate structure, pools and bases, allocation discipline, all common buzzwords in GovCon. And really the thing to keep in mind is indirect rates aren't just kind of accounting mechanics. They really affect pricing, billing, and credibility. And the goal isn't just, perfection. It's really about defensibility and consistency. So, some of the common symptoms here include, indirect allocations handled manually in spreadsheets, outside Epicor with limited review and documentation, right? Or you see pools and bases that don't reflect how the business actually operates. I've had clients ask that all the time, how to kind of create these pools and bases to come up with, results-oriented approach. This really just means costs are classified inconsistently, right? And people don't know what bucket to use. Another symptom is churn, right? So you change classifications frequently without documenting why, which really makes it hard to explain trends. So what do we do? First, you define pools and bases clearly in plain language, not just quote overhead pool, right? But when costs go in, what costs stay out and why. You tie it to your operating model so it's intuitive. Second, you implement a monthly cadence, right? So each month you should review indirect costs for misclassifications, analyze the drivers of rate changes, and really document any adjustments. And this doesn't have to be heavy, but it just needs to be consistent. Third, you kind of implement exception reporting. So for example, you identify transactions coded to unexpected accounts, identify costs that land in a pool but should have been direct charged, identify unusual spikes, right? Identify new vendors or cost types hitting indirect buckets. And in Epicor, depending on your tools, this might be standard reports, dashboards, or exported queries. Fourth here, it's assign ownership, right? Indirect structure isn't purely finance or purely operations; it's really shared. And so somebody has to own decisions and documentation and follow through. So the part two mindset, of this presentation here is really don't just debate rates, build controls that prevent misclassification and produce monthly evidence that you review and manage the structure. So gap number three, this is really the other huge buzzword in GovCon is labor capture and timekeeping controls, right? And this is really one of the most important areas in GovCon because it's frequently tested. It's also one of the easiest places to create audit friction, right? So, common symptoms here include late timesheets and backdating. Another common symptom is superficial approvals, meaning supervisors approve because they have to, not because they actually are reviewing anything to make sure it makes sense. And a big root cause, is really unclear charge guidance, right? So employees aren't sure what to charge, so they guess, and then they charge to what's convenient or easy. And so, here's kind of what good looks like. First you enforce submission and approval windows. So you want consistent cutoff timing. If the business truly needs exceptions like travel or field work, you can allow exceptions, but exceptions should really be logged and reviewed. The principle is really exceptions are the exception, not the norm. Second, you implement a supervisor review checklist. That checklist can be simple, like are the hours reasonable relative to schedule? Do the job numbers and charge codes align with what the person worked on? Are there unusual patterns, like a lot of time to an indirect code during a busy project period? Are corrections documented? Third, you rely on the audit trail, right? So Epicor can typically show who entered the time, when it was entered, who approved it, and whether it was charged, right? So the exact reporting kind of varies, but your goal is to really show a clean trail without hunting around. Fourth here, do periodic sampling, right? So this is where you can build real comfort. For example, each month, sample a small set of timesheets across departments and confirm supporting evidence exists. Work orders, supervisor confirmation schedules, or project assignments. And here's really the point I kind of want to emphasize is timekeeping controls aren't, it's not about making people miserable, right? It's really about creating a consistent process that protects the organization, supports accurate costing and billing, and reduces rework. Strong timekeeping controls are usually one of the fastest ways to improve readiness. So, all right. So gap number 4. this is really about materials and inventory traceability, right? Issues, returns, variances, and this is really where GovCon manufacturers often feel the tension because operations move quickly and compliance really requires structure. So symptoms you'll see is material is issued late or not issued to the job consistently, meaning job costs are incomplete or lagging. Returns happen informally without proper system entries, right? So inventory adjustments are made without strong review, which creates risks. And variance, price, quantity, and scrap are either buried or kind of treated as noise instead of reviewed as signals, right? So strong control approach really includes a few key components. First you define a standard for timely transactions, right? So if you issue material to a job, when does that have to be done? The same day, same shift, end of the week? And really the right answer kind of depends on, your operational reality. But you just need a standard and you need to monitor compliance with it. Second, if you restrict adjustment permissions, inventory adjustments are necessary, obviously, but they're also high risk. So the goal is to not eliminate adjustments. It's really to ensure adjustments are made by appropriate personnel with reason codes and kind of review for materiality or patterns, right? Third, if you kind of implement variance thresholds and workflows, for example, a small variance might be acceptable with a documented reason code. A larger variance should trigger a review, right, by a supervisor, production control, or finance, depending on the nature of the variance. And so, then fourth, you establish kind of a variance review cadence. So most organizations, that's going to be monthly, right? So the review should ask, what's driving your variances? Are there repeated issues? Do we need corrective actions like training, BOM updates, routing updates, or vendor discussions? And that's really a great example of preventative and detective controls kind of working together. And system restrictions would prevent some issues, and periodic variance review detects, the issues that kind of slip through. So gap number 5. So we have this gap and one more to cover off. So really, this is purchasing and subcontracting discipline, right? And so in GovCon environments, purchasing controls really matter because they tie to allowability, authorization, and traceability. In manufacturing, purchasing is obviously very fast moving, so the controls need to be practical. Common symptoms are stuff like inconsistent PO approvals, right? Some purchases are approved properly and others are done informally. Weak receiving discipline, where receipts aren't entered timely or consistently, right? Invoice mismatch, where AP resolves mismatches manually without documenting the why. So what does good look like, in this gap? So really, first you implement role-based approval routing, right? So that often means approvals based on dollar thresholds, commodity categories or contract types. Certain purchases might require a contracts review, program management review, or a finance review. And the specific design depends on your structure. But the key really is approval should be consistent and evidenced. Second, you enforce a three-way match, right? PO, receipt, and invoice. And the exact method really depends on your Epicor setup and your AP process, but the control concept is universal. And you really have to ensure you're paying for what was authorized and received. Third, define documentation standards, right? In a compliant environment, you can show the purchase was requested, authorized, received, and paid, plus any subcontractor supporting documents if applicable. One last point on this one, purchasing controls are really a place where teams overcomplicate stuff, right? Keep it simple, a consistent approval workflow plus a consistent receiving and matching discipline really produces strong evidence, reduces rework, and really lowers the risk of kind of questioned costs. So last gap here, number 6. This is about billing support and reconciliations, right? So even if you're not billed directly out of Epicor, or I should say billing directly out of Epicor, or really even if you are, this is where many organizations kind of struggle because billing requires both accuracy and defensibility. So symptoms here include, billing packages that are assembled manually without, with really inconsistent support. Another symptom is that build costs don't clearly tie to the job costs, right? Or job costs don't clearly reconcile to the GL. And often there's confusion about who owns what, who owns the reconciliations. Is it finance? Is it operations? Is it contracts, program management, or somebody else? So here's the best practice approach. I would say standardize your billing package, right? A billing package is simply a consistent set of reports and support documents that you can produce every time. Job cost summaries, labor detail, material detail, subcontract detail, indirect application summaries, and reconciliation checks. And the exact components vary really by contract type and customer requirements, but the principle is very simple. The package should really be repeatable and it should tell a clear story. Second, you implement monthly reconciliations. And so at a minimum, you want a job cost to GL reconciliation for the relevant cost elements, a billing to job costs reconciliation. So billed amounts are supported by recorded costs. Third, you assign ownership and require sign off. Somebody needs to own the completion and documentation, right? And leadership really needs visibility that reconciliations actually happened. And so if you do these things monthly, you really avoid year-end blow-ups and surprises and kind of audit scramble, right? Billing and reconciliations are an area where discipline really pays off immediately. So. All right, so now we're going to go a little bit into controls design. You hear preventative, detective, and corrective, right? Preventative controls kind of stop problems before they happen, right? So examples of this includes kind of role-based security, approval workflows, system validations, and really in Epicor, depending on your setup, this can be done through security roles, workflow routing, BPM rules, or standardized forms. And the goal is really to reduce the chance that a correct, an incorrect transaction gets posted. Detective controls, these identify problems after they happen, right? So quickly enough that you can fix them without major impact. So examples of these include, exception reports for late timesheets, dashboards for inventory adjustments, variance threshold reports, or periodic sampling, right? And then you've got corrective controls, and these are could be a documented correction process, ticketing, root cause analysis, and retraining. And really, corrective controls show maturity because no system is perfect, but really mature organizations learn and improve. And so when you design controls, you just map them to actual risks. If the risk is labor mischarging, then your preventive control might be charge code restrictions and supervisor approvals. Your detective control might be a labor exception report. And your corrective control might be documented reclassifications with retraining for repeat kind of patterns. And auditors don't expect perfection, but they do expect, a thoughtful control environment where risks are identified, controls exist, controls operate, and evidence is actually available. So, and that brings us to evidence. The slide's kind of one of the most important in the deck because evidence really is where readiness becomes real. A lot of organizations think evidence is something that you kind of gather and, when an audit happens. But the problem is when you scramble around for evidence, you waste time, you miss items, you create stress. And so a mature organization really builds a repeatable evidence binder as part of their monthly cadence. And so, first your policies and procedures, especially for timekeeping, purchasing, inventory movements, and job setup. And these don't need to be 50-page documents. They just need to be clear, current, and followed. Second, a role matrix. So who can do what in Epicor, who approves what, and how segregation of duties is maintained. Right. Third is standard reports, right? Every month you should be able to produce the same core reports. Period close checklist, job to GL reconciliations, variance reports with review notes, time approval summaries, inventory adjustments, adjustment logs, anything else that demonstrates controls operated. And then the fourth on here is samples. Sampling is powerful. You keep a small monthly sample of timesheets, PO approvals, receipts, reconciliations, all with supporting documentation. And fifth, you've got access reviews and change logs. So periodically, often quarterly, you review access for key roles and document it. And for key configuration changes, you maintain change documentation. And if you do this consistently, your audits get easier, your close gets smoother, and leadership really has confidence that compliance is managed, not reactive. So that's the bulk here. And now we're going to kind of move through, through a lot of details, a lot of information. I'm going to send this deck out following the presentation, but just kind of, quickly on the 2026 or 27, depending on where you're at, roadmap. So, if we kind of translate everything into a roadmap, sequencing is everything, right? So I'll give you a phase model that you can kind of tailor. So in the first 0 to 30 days, you focus on stabilizing the basics, right? What does that mean? Standardized job setup and charge guidance, tightening timekeeping submission and approvals, cleaning up obvious security role issues, defining the minimal set of monthly reconciliations and reports. And so those are like the stop the bleeding items, high impact, low complexity. In 30 to 90 days, you build controls and reporting. And that's really where you formalize exception reports, variance reviews, like we talked about, PO approval consistency, inventory adjustment monitoring, and the monthly evidence binder approach. And you're making the process kind of repeatable here. And then in 90 to 180 days, you moved into structural improvements, big stuff, refining indirect rate structures, improving master data governance, enhancing workflows and reducing manual spreadsheets. And here you're kind of building durability, right? And so beyond 180 days, you focus on optimization and continuous monitoring. And so that's really where you kind of mature into a managed environment, automated dashboards, periodic internal audits, training refresh cycles, and kind of continuous improvement and continuous monitoring. And so the key idea is really, get to repeatability first, then automate, then kind of optimize. And many teams try to automate chaos, and that kind of creates expensive complexity really without reducing any risk. And so this is kind of the sustainment slide. So even the best configuration and documentation will drift without an operating cadence, right? So here's kind of a cadence you can use as a starting point. So monthly, during the close, you run a compliance-oriented close checklist, right? Some of the things we talked about, job to GL reconciliations for the key cost elements, billing support tie-outs if you're billing monthly, variance review with documented notes and follow-up actions, right? And confirmation that key approvals happened, like approvals and time approvals and PO approvals. Also monthly review exceptions, right? So for timekeeping, look at late submissions, backdated changes, unusual charge patterns, missing approvals. For inventory, you review the adjustments logs, reason codes, and any kind of high dollar adjustments. And if you go quarterly, in that case, you run access reviews and segregation of duty checks, right? Confirm that the right people have access, that terminated employees are removed, that privileged roles are limited, and that changes are documented. Also quarterly, do a training refresh and policy attestation, right? And it doesn't need to be painful. It can be a short training module and a simple acknowledgement. And the benefit there is huge. You reduce I didn't know type of errors, and you demonstrate a strong control environment. And this cadence is really what turns compliance from a project into kind of operating capability. So that's the bulk of the details. And I just like to throw in kind of, before we wrap up here, just share how, we at Baker Tilly may be able to help or, put a second set of eyes on some of this stuff. One option is obviously a readiness or gap assessment, right? Typically includes stakeholder discussions, walkthroughs of current processes and system workflows, structured, maturity scoring approach like we discussed today. And the output is a clear heat map of risks and prioritize actionable, an actual roadmap. We spend a lot of time also in our risk advisory practice around controls, internal controls, SOX environments and audit readiness. And that's really where we can help organizations define practical, sustainable controls along with the supporting documentation and evidence, so you're not kind of scrambling around when questions come up. Another area is ERP and process alignment, right? So this is really less about any one system and more about making sure your processes, controls, and system configuration are really all working together. And that can include workflow design, approval structures, data governance, reporting, and that kind of supports both operations and compliance. And so then finally here we can support, implementation and roadmap execution, whether that's project management training or helping establish an ongoing cadence around reporting, reviews and continuous improvement. So the process actually sticks, over time. So there's a handful of ways that we help a lot of our GovCon clients and GovCon manufacturing clients. So coming right up against noon here, so I will just kind of end here quickly. And if there's any follow-up, questions that I didn't get to today, I'm happy to take a look at those and send you a email note in response, and also response to that first question that we had today. But we appreciate the time here today, and thank you for joining us. And if you'd like to kind of continue the conversations, our teams here at Baker Tilly and Creative Technology are happy to schedule a quick one-on-one discussion anytime to kind of review your compliance readiness or system landscape. And then we're going to be sharing a few follow-up resources after this session, including the slides. So with that, I will pass it back to Mary Chris. And perhaps we are just going to...
Sorry about that.
Oh, good.
I was thanking you for your content today. Is very helpful. And we really appreciate your time here today for attending. Rich, we did get a lot of questions that came in the last half of the webinar. So maybe we can move those to email, get those answers out. Okay. All right. Well, thank you, everyone. Have a great day.